the Bank of Canada has decided to hold its policy rate steady for a fourth consecutive meeting. For the first time, it has stated explicitly that it won't need to increase the rate again if the economy evolves in line with its forecasts. Under the leadership of Governor Tiff Macklem, the benchmark overnight rate remains unchanged at 5%, a decision that aligns with market expectations and the predictions of economists surveyed by Bloomberg. According to officials, data suggests that economic growth has stalled and will likely remain slow in the near term. This slowdown is expected to help bring inflation back to the bank's 2% target next year. Governor Macklem has indicated that the Governing Council's discussion about future policy is shifting from whether monetary policy is restrictive enough to how long to maintain the current restrictive stance. This dovish stance indicates that the bank perceives a rapidly slowing economy and believes its past rate increases, a substantial 475 basis points in less than 2 years, are sufficient to quell inflation. This potentially paves the way for rate cuts in the coming months. The Canadian dollar experienced a tumble following the announcement, erasing earlier gains to trade at $1.3468 at a few minutes before 10 in the morning New York time. The yield on the benchmark 2-year note was down about 4 basis points on the day to just over 4%. The bank has reiterated the importance of balancing the risks of over and under tightening. However, it has also expressed concerns about the persistence of underlying price pressures. While policymakers haven't ruled out further rate increases if new developments push inflation higher, they have removed language from previous policy statements that suggested they remained prepared to hike again. The bank intends to see further and sustained easing in core inflation and will continue to focus on the balance between demand and supply in the economy, inflation expectations, wage growth, and corporate pricing activity. In its statement, the Bank of Canada forecasts that the economy is now in modest excess supply and has reduced its economic growth projection to 0.8% this year, from 0.9%. Despite this, the bank's base case remains a soft landing, with growth expected to pick up around the middle of the year. Officials anticipate that inflation will remain close to 3% over the first half of 2024 before declining to around 2.5% by the end of the year and returning to the bank's 2% target next year. In conclusion, the Bank of Canada's decision to maintain its policy rate 5% reflects its assessment of the current economic situation and its expectations for the near future. Potential implications of this decision could include a slowing of the economy, rate cuts in the coming months, and to the bank's 2% inflation target next year. As the bank's decisions and predictions will be closely monitored by economists, market observers, and indeed, the world at large. In light of the Bank of Canada's recent decisions, observers around the globe are keeping a close eye. The bank's choices have a ripple effect, influencing not only Canada's economy, but also the global economic landscape. There's a tangible potential for future changes in policy, based on the evolving economic climate and the bank's commitment to maintaining stability while fostering growth. For investors, economists, and financial enthusiasts, monitoring these developments is more than just a casual interest. It's an essential part of understanding the complex web of global finance. As we continue to navigate these uncertain economic times, the decisions of the Bank of Canada will undoubtedly play a significant role. Their choices now will shape our economic landscape for years to come.